Hello everybody and welcome. The mega cap stocks hit a wall of resistance this week, even as small caps and the Dow rallied. So let's see how we could have used our tools to navigate the market this week for the week ending July 19, 2024. A gentle reminder, there's risk of loss in trading. This week the broad market was quite strong, with the exception of tech stocks and the Magnificent Seven. So the Russell 2000 and the Dow Jones are at the top of the table. The QQQ and the semiconductor stocks are at the bottom of the table. The S&P was down about 2%, but the equal weight S&P was roughly flat. So the broader market was playing catch up this week at the expense of tech stocks, as we mentioned last week. This is a look at the VTWO ETF or the Russell 2000 ETF. The bands are the FEMA bands with 50-50 length and a 5 or 9 day offset, and ATR bands of plus or minus 3 units. We had a clear breakout outside this upper band with the CHATS indicator or the Chande absolute trend strength at 100. So it was a strong breakout, and then we had a pullback. So it remains to be seen how far the pullback will progress. This is daily data for the S&P 500 index. We've used the ARCH indicator or the adaptive regression channel. It's a 150-day channel with no delay. The inner bands are plus or minus 1 standard deviation, and the dotted bands are plus or minus 2 standard deviations. Observe we've hit resistance somewhere near the top of the band, and then we've pulled back. We've pulled back into the middle of the range, so perhaps we'll find support in this general area, and we'll explore that in a moment. Here we apply the parabolic accelerating long stop or PALS exit. We're using 10-day upper highs high to initiate the start of the move, and the lowest low, the 20 bar, as the level to start from. The orange dots are the trailing stop, and this would have taken us out yesterday. So all in all, if you had entered here on this general area, you could have followed the trend pretty close to the top. So a decent exit for a mechanical strategy using purely default values. This is the volatility stop exit, and the values here are 12, 12, 4, and 12. That is using a 12 bar channel with a 12 bar delay, and we're using a 4x multiple to calculate all that. And you see we are pretty close to getting stopped out, though history has shown that if we go below this level, this might be a rebound opportunity in the near future. I showed this chart for the QQQ last week with the ARCH channel, 150 days, to show that it had hit resistance near the top. So let's see what happened this week. The 150-day channel with no delay, plus or minus 1 sigma bands and plus or minus 2.5 sigma bands, same as last week. This was the resistance area last week. The market we expected would pull back towards the middle of the range, and it has. We have a little bit of a gap here, so potentially support at 468 area, which would also coincide with the lower bound of this plus or minus 1 sigma channel. So hopefully we should be in a support zone at least for the short term. This is the QQQ daily chart with the volatility exit, again with default values. And if we had taken this trend, you see we could follow the trend pretty much all the way to the top, and we'd have been stopped out 2 days ago if you had used this indicator. And again, a reminder that in the past, a dip below this has also been an opportunity for a rebound. This is the QQQ with the volatility exit, and this is where we are today. Just a reminder that whenever it has fallen below this dotted trailing stop, we've had a rebound opportunity in the market. So I would expect a rebound starting fairly soon with a bit of luck. This is the Nvidia daily chart from June of 22, so about a month ago. We had just hit a high at 140.76, and I had projected a pullback in the 112 to 120 zone, sort of in this green box, and that was a month ago. So let's see what happened. So this is the daily chart for Nvidia. The green box is a zone we identified a month ago, and we've tested it 1, 2, 3, 4, 5, 6 times with heavy volume. So we've maintained the support area. So I'm optimistic that we can hold it, but these two green lines show you which is the length of that consolidation, that we still have some time to survive for this resistance to hold. And if this breaks, then we could go down to 108 or even down to 100. So it's important that Nvidia holds support here. So here we're just marking some support and resistance levels for the S&P 500 index. We had initial resistance of 5,500 that was broken on the way up, so it should be support on the way down, and we are into it now. The next layers of support are at 5,400, 5,430, and then 5,375, let's say. So hopefully these will hold for the next little bit. This is daily data for the DIA ETF, which is the Dow 30 ETF. Breakout outside the bands was successful. The chats indicator was close to 100. We're in that situation now, but we've broken out above this resistance and now we've pulled back a little bit. So hopefully it's just a test of this breakout area and we can go higher. But then if the market goes lower, then the next area of support will be near the 50 bar moving average. I hope you like and subscribe to my channel, and thank you for listening.